Hey everybody, it's Mike. I hope you guys can hear me okay. And I'll get started here. It's 10 o'clock, it's Sunday morning. Not sure if my microphone was working there for a second. I was going through some last minute checks. Okay, good. Everything is working. I'm going to try and keep it pretty simple today, not like one of these big long marathon webinars, workshops, whatever you want to call them. It is Sunday morning, so thanks for getting. If you're in the U.S., thanks for waking up early. I know a lot of people like to sleep late. And what we'll be talking about today is the reversal scalper. So just really quick, I see a video there, a question from Yolanda asking about markers. Yeah, it should be markers compatible. I'll be doing a separate video on that and sending it out or posting it. I don't want to get into the markers part today. Bob, I did ask my programmer about your email with Bloodhound. He says it should be compatible, but I'll try it out and test it myself because he's saying you should be marking the plots. But anyway, guys, just to get started, the reversal scalper is a new indicator from Orderflows that works on NinjaTrader 8. So I don't have like a big slide deck presented, but just your normal disclaimer, just go over that. Now the reversal scalper, basically what we'll be talking about today is why we created the reversal scalper, sort of talk about the settings, what the trade entry signal is for those that aren't familiar with some of my indicators, where to place your stops, and I'll talk about some examples and sort of take you through different markets with different settings. Now the thing with the settings is it's not like there's so many moving parts, so many variables. There's basically one main setting, which is the reversal strength, as well as whether or not you want to use the trade entry signal. So the thing to remember with reversals, right, because there's, in my opinion, there's a few ways to approach the market, right? Reversals, momentum are the two main ones that you want to really look for. And the things that I like about reversals and momentum, and hence this is called the reversal scalper, is because it allows you to sort of be trading ideally in the direction of the market. Okay, and and that's important because even if you're wrong, you should be able to discern that you're wrong pretty quick. Okay, and most importantly, with reversals, which differ from momentum, is everyone always talks about you got to get in on the trend as early as possible. The trend is your friend, right? But you really want to, where do trends start, right? When the market reverses. Yeah, I mean, trends can start, after a long period of sideways activity. And the reversal scalper also does pick it up sometimes when that's happening. But, you really want to get into a trend as soon as possible. And often, the closer you get to, the turning points in the market, when the signs are there that the market is reversing, that's your cue to really jump into the market. And one of the things that I like about reversals, I've always liked about reversals as opposed to things like breakouts and other forms of trading, is ideally, you know where you're going to be placing your stop, and it's based on market structure, right, as opposed to a indiscriminate dollar amount that you're just sort of taking an average over the last X amount of trades and saying, yeah, this is the range from the stop, and then you sort of take an average of that. And it's very clear on the chart where you should be placing your stop. And with the reversal scalper, we highlight the bar, sort of the initial place where the reverse is taking place. So you could easily see where you should be placing your stop. So I'm going to pull up the charts, and I'm going to talk about settings, trade entry signal, stops, and then we'll go into some examples. Okay, so this is a footprint chart, and I'm going to start with a footprint chart, but then I'm going to use mainly a simple candlestick chart, okay, because again, not everybody uses footprint charts, but I do want to show it to you. Start out with a footprint chart and just sort of take it from there. So this is crude oil, right? Now this is a 1-minute chart. Now I do realize, everyone uses their own chart style, their own ways of analyzing the market. Okay, so me, I prefer a 1-minute chart. I also use things like tick-based charts, and certain extent range-based charts. So, you know, if you use your own chart, just bear with me, and you can see how you can use the reversal scalper. So let me just open it up. Now, the reversal scalper, it's very simple in terms of settings. Okay, so you can see down here, reversal scalper settings. So, you know, enter to enable it just really quick. You just enter your email address and click enable. If you don't click enable, it won't show up. There's a trade entry signal, which I'll talk about, and the parameters. The offset is how far above or below the bar you want the signal to appear. The reversal strength is the main one here, reversal strength. For Crude, I like a setting of around 2. The base setting is 0. The default setting when you install reversal scalper, I believe, is 1. You could have a sound alert if you like, and you know we explain in the user guide how to change the sound alert. You know, if you don't want to use the default that we have set up. Now there's the buy and sell colors. Those 2 different colors. Okay, this buy and sell color that you see in the setting is actually the color of the bar, right? The signal bar, or I don't say signal bar, but rather sort of the trigger bar that's saying, hey, you know what, a reversal is starting to take place here. Okay, and there's an opacity that you can change it. So, for example, okay, you can see the blue in this bar is this is sort of, you know, the telling you that a reversal is taking place, just as this little blue here, this sort of orchid color. It's kind of like a pinkish color. It's called orchid on NinjaTrader. And there's another one up in here. And the reason why we color this is because that's going to give you your stop placement. Okay, so, you know, if you're getting short in here, this triangle is actually telling you to get short. So you know your stop is going to be above this high, or below this low, or below this low, or above this high. And you know, rather than sitting there trying to just pick some dollar amount or X amount of ticks, you know, it's really based on, you know, where the market is reversing from. Now, there's triangles, right? Up and down triangles. Let's get back to the settings here real quick. All right, so the up and down triangles are actually here down at the bottom. These are the plots. And you can see it's default is set to 5. For this presentation, I bumped them up to 10 to make it a bit easier to see. And when you see the triangle, that's what's telling you to take the trade. Okay, now getting back to the settings, there is a thing in there that's called the trade entry setup, or trade entry signal rather, this one right here. And what that does, okay, so you can see there's a blue triangle down here at the bottom, and it's appearing on the bar after the bar with where the reversal is starting to take place. And it will print after this bar is closed. Okay, it's not going to print immediately because it's waiting for that confirmation of this bar to close. Then it will print here. And if you're not using the trade entry signal, that's your signal to get long. Now, if you're using the trade entry signal, I'm just going to show you the difference. Trade entry signal, for those of you that are not familiar with it, is something that I've been using in most of my indicators over the last several years, which basically tells me that, you know, the conditions are met for the trade. And not only that, but I have follow through order flow that's taking place in the next bar. So and I use 2 and 2, which means it's got to move by 2 ticks over the next 2 bars. Okay, so you can see it's turned on here. So what that means is, so earlier, right, we saw this blue triangle appear here on this bar. Now it's appearing here. So what's happening is you have your reversal forming. This bar is confirming the reversal, and this bar is confirming that you have the price action going in that direction. Okay, that's why it's appearing here. And as soon as this bar here starts to move 2 ticks, because it's within 2 bars here, above the high, since it's a bullish signal, if it was bearish, it'd have to be below, then it's going to print. Okay, and you know, you could just see them all over the place. That's why you don't have signals here or here. Okay, up here you have your bearish signal. So here's your bar that's telling you, hey, you know what, a potential reversal is taking place. You're waiting for some confirmation here in this bar, and then this bar you get your trade entry signal coming in, right? Now it's appearing here, and it's actually going to fire off as soon as the conditions are being met in that bar, okay? And again, knowing where to place your stop is above, since this is a sell, right? You're going to place your buy stop if you're short to get out above this high. See, the market did come back up here and test that high where you had the reversal signal appearing. Okay, so again, you know, we wanted something that was easy for stop placements, right? And that's why we color those bars so you can see visually, you know, where to place it. Now, if you're using some sort of automated strategy that, you know, he's just going to automatically, that has to enter an ATM, you know, I would suggest something a little bit wider because you can always go in and manually adjust it, right? I mean, if you got to understand the market that you're trading. So, you know, if you're trading, say, like this is crude oil, you know, I don't know, maybe you start out with 20 ticks. Then once you're into the trade, you can always adjust it to a closer place on the chart, you know, above the high or below the low if you were getting long here. And again, you know, this is why we use the trade entry signal, is to keep out of trades like this where it's just not going anywhere. We're going here. Now, so that's, you know, basically it. I mean, there's not a whole heck of a lot of settings that you really need to work with, right? And that's by design. Excuse me. You know, you don't want to have like 20 different settings that you got to adjust, and then, you know, you're fine tuning it all. You know, no, you try and keep it simple. We put everything into that sort of that reversal strength is sort of the combination of all the parts. So it's a little bit hard sometimes for people looking at a footprint chart if you're not used to it. So this is a candlestick chart, okay, your normal candlestick chart. Now with Reversal Scalper, you don't need to use tick replay, okay? But if you're using something that requires tick replay, so for example, oops, right, my footprint chart that I use requires tick replay. So whether tick replay is enabled or disabled, it doesn't matter. You can use it either way, with it enabled or disabled. But if you're using it together with you know, other tools that do use tick replay, you can still use it with tick replay. I do have some indicators that it's weird because if you use them with tick replay, they won't work for some reason. Usually it's the other way around. Usually it's things that work with tick replay obviously won't work without tick replay, but I'm starting to see some tools that specifically it's the opposite, right? You have to turn tick replay off. Now, so this is crude oil. So let's just sort of take a look at some examples with the different settings that you're going to sort of run into here. All right, so the default setting when you first install Reversal Scalper, okay, I believe it is trade and entry signal disabled. So Reversal Scalper is down here. So you can see trade entry is disabled and it's set at 1, okay, as the reversal strength. So this is what it's going to, this is what it will look like on your chart. Okay, so this is crude oil again from Friday with basically the default. Okay, now when you're using, let's put this over here and we can sort of make these changes. So 0 is actually the base, not 1. It starts at 0, and if you're having 0, right, you're going to get a lot of signals. Now, I'll be talking about some markets like the slower moving markets like bonds, ultra bonds. You know, you may want to play around with 0 in those markets because, especially if you're looking at a time-based chart where you don't get a lot of the movement that you do see in other markets, obviously like crude or MES or MNQ or YM or even the currencies or gold. So, you know, in some of those slower moving markets, yeah, you might want to start your analysis using a reversal strength of 0. Okay, so this is 0, right? You can see all the signals there. You know, when you start going up higher in strength, right, it's removing, you know, some of these signals in here that you were seeing a lot earlier, right? Just go back to 0. You can see on the left-hand side of your chart, this choppy area. Then you make it 1. Okay, The next level is 2. It's a bit higher. Going to peel off, it's sort of like an onion skin, depending on the volatility of your market, right? Is what you're going to want to decide on what you're going to use in that market. Now, with the strength, I usually, I don't go through every levels. I usually go like 1, 2, 3, 5, 10. Even if you wanted to, you could probably go fib numbers, but 5, right? So this is 3 here. If you go to 5, it's just going to remove some more. And again, it really depends on your volatility of the market. Right? I mean, even if you go to 10, it might not have a whole heck of a lot of difference, but there is some difference. Okay. Now, just go back to 0. Okay, so you see a lot of signals, right? And this is the part that frustrates me. Sometimes people get a tool, and not just my indicators, but I see it with a lot of people, and they don't go and start to use it and try to understand sort of the settings on when you make adjustments. But now the trade entry signal, okay, so you have your reversal strength, okay, so this is set at base of 0. Now, if I add the trade entry signal, it's also going to act as a filter, right? It's going to filter out some of the trades. So you're seeing, even with the reversal strength set at its basic level of 0, right, with the trade entry signal, you've filtered out a bunch of losing trades. Okay, let's go back, right? This is with it disabled, right? You've seen a lot of signals, and it's just going to give you a headache looking at trying to trade all these signals. And you don't want to be trading every signal, right? You want to be trading signals where you have order flow that's follow through. Basically, you're identifying a reversal. In a sense, you also want others to be coming in as well and identifying reversals for whatever reason, right? Maybe they're not following over. Maybe they're following moon tides or something, or a time of day. There are people that do that, right? They look at the time of day and there should be a reversal coming in here. Now, if you add the trade entry signal, it's going to clean up your chart a bit. Okay, so you can see here you're seeing better trades. Now, again, this is with the reversal strength set at 1, which is the base. If you start adjusting the reversal strength with the trade entry signal, you start going up to a higher strength, you're going to see less signals, because now you're sort of making the requirements for the reversal a little bit stronger, and at the same time you're looking for that follow through order flow. So that's with trade entry signal turned on, with setting at 1, with 2, it's going to remove a couple more, a few more. If you were to set it, at 5, might even remove, 1 or 2 more. So again, depending on the market that you're trading, it's something that, you're going to want to play around with. Now, I'm not saying, you do it after the fact. I mean, you do your studies, you test it on what you're comfortable with, because, everybody has different risk tolerance levels. Everyone has, different chart types that they're going to be looking at. So again, this is just a simple bar chart. Some guys have been emailing me about Heikin Ashi recently, and telling me, oh, you got to use this with Heikin Ashi. I'm like, okay. I'm a say purist. I just keep my chart simple. But if you are on a chart, like Heikin Ashi, again, I would start at sort of the same point. Reversal strength, start at 0. Me personally, I like to use a trade entry signal on just about all normal moving markets. If the market's kind of quiet, slower moving markets like bonds, I might turn it off. But this is how, this is get the crosshairs up here, the Heikin Ashi with the signals. I mean, generally, you're generally getting the same sort of moves, but obviously, the way Heikin Ashi calculates a candlestick chart is a bit different than, a normal candlestick chart. And again, that's with that reversal setting at 0, but with the trade entry enabled. So if you disabled it, this is what it's going to look like. Okay, so you're going to see a few more signals, some that weren't so good, look like the trade was starting to happen here. And you get some small trades, some small stop outs there. But overall, it's helping you find those reversals. I just prefer to use the trade entry signal. Okay, so again, that's Friday, in the evening session. In the mornings, I'll say evening, but early morning. Let me just go back to a normal 1 minute chart. Get out of here. Again, not everyone's going to use Heikin-Ashi charts, and let's make it that's on. For crude oil, I like to stay between 2 or 3. You're still getting moves, overnight. There's a small move here. There's a nice little move down. Friday morning. Again, you see, let me expand this chart up. So it might be a little bit hard. Let me just change the opacity, the color here. So it's at 0.2. I'll change it to 0.5. So you can see these colors maybe hopefully a little bit better. But you're seeing here, right? This is sort of your start of your bullish reversal, right? Then it's coming in, then it's finally confirmed here. So I talk about knowing where to place your stop, right? Let's expand this up, move it up, so it's a little bit easier to see. This bar here, the low of this bar is where you're going to be placing your stop, right? Well, not on the low, but just on the other side of that low. You see the market came down and tested that low before going up, right? It's a nice move up from 20 all the way up into the 60s. But even here, right, you have your bullish signals coming in here. You get your buy signal here. Your stop just goes below this low of this blue bar. And you see the market went up, actually pulled down, tested that level, came right down to that level. But you should already be long. Then you're seeing more bullish signals come up, basically from that earlier start of that move. During the European hours, there were some potential sells in here. We just sort of went sideways, going up. Now, it's funny because people will see this signal up here and say, this indicator sucks because it picked this high in the move and then the market sold off. Well, okay, do understand, right? The market had just moved up pretty much. This is a nice move here from 60 all the way up to 25. So it's a 60, 70 point move already. Then you're getting a buy signal. That's probably not the best place to be taking a buy signal, but whatever. Even you get long in here, even say you get long at the high of this bar at 29, placing your stop here at 17, you get stopped out. Okay, fine. You get your next sell signal coming in here, around 05. This is where you're placing your stop up here at 17. So you're getting short at 05. This is the bar that you're going to be placing your stop behind, right up here at 17. The high is 17. So you're placing an 18 or 19. And it makes this nice move back down from the 05 back down to the 60 area, even down into the 50s. This is the signal you'll be taking up here, this triangle, not be looking to take this one. So and then sort of on your way back up again. So let's take a look at some other markets. Whoops. Mini Dow, right? Mini Dow is a nice market. And so the question comes up is, what's a good market to trade? Should you be looking at more volatile markets, or can you trade slower moving markets? Right? Volatile markets obviously are some of these stock indices, crude oil, E-minis, gold. I sort of lump together E-minis, gold, and the currencies. Or what I call sort of normal markets, and the slower moving markets obviously are the interest rates. Bonds, ultra bonds, 5s, 10s, even the ultra 10s. Ultra 10s is a nice contract to trade because you do get some nice movements. Hang on a second here. I'm trying to drink some water real quick. Okay, so this is gold. This is Mini Dow, YM. And again, sort of just go through the settings, right? When you install it, right, the default settings are 1, and this is turned off. Okay, and for some people that might be, a bit too bit too many signals. Okay, so where's the cash open? This is Friday, right? You got this area of chop basically going back and forth. So what I like to do, right? Again, if I'm new to a market, any market, they start out obviously at the defaults, right? I'll go to 0. Obviously, 1 I think is already too many signals because this is a market that has nice movement and you don't want to be setting it too low, right? Again, 0 is the base. Go 1, 3, 5, 10. You don't really need to go above 10. Some guys have experimented with in the 20s, but you don't need to go really above 10. Obviously, 1's going to give you a lot of signals, especially on a market where you're getting a lot of movement up or down in a bar, right? So I start at 0, and then I'll sort of just walk through it before I find something comfortable. 1 starts to look a little bit better, right? You can see these signals coming in, but again, the thing is, for some of you guys, you don't want to be death by 1,000 cuts, right? These small little moves here. So what you got to do, then you start adding the trade entry signal, right? And especially important on some of these more volatile markets. So you can see the difference, right? Trade entry signal off. You're seeing these shorts here taking place, right? Trade entry signal is off. When you turn it on, it's removing a lot of that sort of, chop, if you will. And it's sort of giving you slightly better, entries. Yeah, I mean, there's still times where you're having some losing trades, here, a little bit here, but you're not getting, your death by 1,000 cuts. But at the same time, it's still allowing you to take advantage of a lot of those moves. If you go with, slightly higher reversal strength, say 2, right? Again, it's going to remove a few of your signals. Go to 3, it's going to remove a few more of your signals. Then you should try it also with trade entry signal on with your base reversal strength of 0 as well. Okay. And again, for some of you guys, it still might be too many signals, right? So sort of find your sweet spot. Me, I like on these more volatile markets, YM, MNQ, crude oil, a reversal strength of 2 or 3. For me, it's just much easier, right? And yeah, I'm willing to take my loss here. This one, it didn't stop you out because, right, you're getting your signal on this bar, but your stop is below here. So it's just sort of going sideways, right? And you have to have not just a stop based on risk, but also time risk, right? So if you're getting long, off of this reversal area, you're getting long in here around 326, it does pull back down to 298, but it just sort of goes sideways on you, keeps going sideways. Even you're getting some more bullish signals and it's still not moving. You got to cut it, right? Don't wait for it to stop you out. Again, you have a signal over here and it's just not going anywhere. You're sort of underwater for a while. Then you're thinking, oh, this is it. It's going to start happening. Then you get another bullish signal here. Oh, this is it. It should be taking off. And it doesn't. It just pulls back. Test your stop area. Then you get another signal. This time it's a little bit lower. Okay, we can't even take out the high of this signal, and it's just sort of going sideways. If you have the opportunity to have a small profit, take it. Small loss, take it, rather than let it come and stop you out. Because you've had 1 chance, 2 chance, 3 chance. Your stop is still fine because your stop is below the low of this trigger bar, right at around the 98, 97 area. And it's not making the move, right? At some point, you got to say, are we going to make this move or not? And it's just not making that move. Okay, so, that's those are crude oil, YM, again, M&Q, I'd treat the same as those markets. Now, if you're into sort of a slower moving market, like say bonds, okay, the 30-year contract, ZB. So let's just go back to sort of the default settings. Okay, so this is the default settings on Friday. Okay, now Friday you did have some movement in the market, but just the CPI day, obviously you did have some movements, but the day before CPI was kind of quiet. I don't want to say in a range, but basically trading between 24 and 04. And this is the default settings, okay, of no trade entry signal and reversal strength at 1. If you had the reversal strength set at 0, obviously you're going to get a few more signals as expected, right? This is on the CPI day, and then this is on, again, on Friday. Now, with the market like that moves slower, me personally, I still like to let the market sort of take me in. Okay, now on the slower moving markets, if you're using the trade entry signal, right, even with the reversal strength set at 0, right, you're going to get not that many signals. Some days might not get any. So you can see there's one sell here. Okay, that was on Friday. CPI day, you had a few buys, 1, 2, 3, right here. This last one turned out to be a nice runner. A couple sells that just reversed on you pretty quick, stopped you out. But on that previous day, where it's just a lot of sideways activity in here, you had one signal. Okay, that's with the trade entry signal turned on and reversal strength set at 0. If you had a higher reversal strength 1, right, you might even get a bit fewer signals. Okay, so this one sell disappeared, so you're just left with the one buy, the one sell that didn't work, and then another buy. And on Friday, you still have that sell signal there. And even if you went up to a slightly higher area, 3, okay, still got your sell signal there. Now that one buy that was coming in here is gone. You just have this one buy and this one sell. So on these slower moving markets, right, on this day you have no signals. You don't want to go too high on the reversal strength if you're using the trade entry signal. If you're using the trade entry signal, sorry, not using it, maybe you want to try to use a higher reversal strength, 3 or 5 even. Okay, so this is 5. Okay? It's not too bad on a day that's kind of choppy, a little bit back and forth. Right, on the CPI day, again, not too bad. You caught that major move there. You're not going to take this trade right ahead of the CPI anyway. Got a little bit of move up, a little bit of a move down. Again, this is on a 1-minute chart, and not everybody uses, obviously, a 1-minute chart. Right, and then this is Friday's activity. Check a Heikin-Ashi chart on this day. 1 minute. So the settings are set at here. Settings of, well, you would start with this turned off. You're not going to use a 5. Keep it at 0. Not too bad. Right, on this day, again, that sideways day, not a whole lot happened. I got the day before on here. Yeah, this is actually the 10th. It was the 10th, Tuesday, I think. So, not too bad. Again, I don't want everyone to start running out thinking Heikin-Ashi is the answer to everything. I just prefer to use a simple 1-minute chart in these markets. Now, when you start going into other contracts, say Euro currency, okay, Euro FX 6E, and again, starting out with the indicator settings, all right, the default is turned off and 1. I mean, 0 is obviously going to give you a lot of settings. So this is the setting at, make this chart a little bit easier to read for you. Setting of 1 with no trade entry signal. If you add the trade entry signal, good luck. It does clean it up a little bit. You catch this move down. This one stops you out. You catch another move down. That's with the setting of 1, the default setting with the trade entry signal turned on. But if you're using 0, right now you're seeing some buys come in here. So it really depends on what you want to use it with, right? Whether you want to use the trade entry signal. Now, the thing with the trade entry signal, you don't have to use 2 and 2. You could use, say, 1 and 1, right? Meaning it's got to move by 1 tick over the next 1 bar. And you can see there's a few more signals, right? Or you could use, it's got to move 2 ticks over the next 5 bars, right? Signals come in. You adjust the settings, right? It's going to make a difference. So me personally, I've just found in my own trading and testing over the years, 2 and 2 is what works best for me. Okay, and again, everybody uses their own style of chart, right? Not everybody uses a 1-minute chart. Sometimes people say, well, I use a 100 tick chart. Okay, well, starting out, you just start at the base setting and you adjust from there. So this is the default setting. Not too bad. I mean, you're catching some of these major moves here, but you still want to let the market take you in. That's the best way to trade, right? It's let the market get you into the trade. So you're catching this high here for that move there. You're catching this move down. You do have a small move here, a little back and forth here. Some small moves in between, small profits, small losses. But again, you could adjust, the strength setting. Start at 0. Okay. If you don't like what you see on a chart that's showing 0, then you just go through and find on the chart type that you're looking at, again, because this is a tick-based chart, right? Again, everybody has their own personal charts. I see guys that use 1,818 tick charts. Okay, you still got to make those slight adjustments based on the chart you're trading, because sometimes the more volatile the chart is you're going to need to make an adjustment. You can't trade a sort of a wider ranging chart, an 1818 tick chart, same way you trade a 100 tick chart, just as you're not going to use the same settings that you'd use on a 1-minute chart necessarily that you'd use on a 15-minute chart. So there are some slight adjustments, but it's not a big adjustment. You just really, all you're doing is adjusting the reversal strength, right? Maybe you're gonna, honestly, if I was using a wider, I'll say wider chart, but let's take a look at something else real quick, like a 5-minute chart. Okay, 3, not too shabby, but you always got to start at 0 at the base. Okay, so this is a 5-minute chart. So the trade entry signal turned on. So you can see here, right? Okay, yeah, it is what it is. Maybe you're using, some guys like to use a 2-minute chart. Okay, so every chart is you're gonna get different entry points, right? It's going to look different. You got to make those minor adjustments. I personally, I like to use the trade entry signal. If you're not using it, that's what it's going to look like. So then you're going to probably want to adjust maybe the reversal strength, clean it up a bit. So this is no trade entry signal with the reversal strength set at 3. Okay, and you caught from this move, from 36.5, 37, all the way up into the 70s. Then you take a trade here, you get stopped out. Okay, fine. You just had a nice move. This one's going to give you a small stop out, right? Your stop's up here at 63.5, 64. You're getting short around 60.5. Okay, you're stopped out, but you're catching the moves like this up here or this move down. So again, it really depends on the chart that you're looking at. And again, it's not a one size fits all, because different chart types are going to be more volatile than others. So let me, I got some time here. I don't want to go on all day, but I'll take a look at some of these questions here. All right, let me just go through here. Does it work with Renko charts? No, I don't use Renko charts, and I mean I don't know honestly. Honestly I don't like the default Renko charts that NinjaTrader has. No, it's not going to work with it. Yeah, if you're going to use a rank, I don't know. I know other people have things like Uni Renko that I've looked at before, so there might be some use to it. But you know, the normal Renko charts from NinjaTrader, I don't really recommend at all for anything. Tim, it would be nice to have adjustable size allow you indicator. Yeah, this one does actually. It does have an adjustable size. You could adjust the size of the arrow down in here, right? Whether the default is 5, okay, which is that, you know, you can make it even bigger. You go up to 15. See here, so you can see it's, you know, much bigger signals. Let me see another question. Does a triangle indicator print during the bar or after the bar has closed? Okay, well, that's a good question. So depending on how you're using it, okay, this one here is without the trade entry signal. So it will appear once the second bar closes. Okay, once it's confirmed that, you know, there's a potential reversal taking place, it will print as soon as this bar closes after the bar that's colored. It's not going to print on that bar. Now, if you're using the trade entry signal, so because it's waiting for that bar to close before it's confirming it. You know, we went back and forth. You know, should we print it on the very next bar, or should we keep it on that bar as soon as it closes? Because it'll print once it's closed. Now, if you're using the trade entry signal, there's a slight difference here. So let me just make an adjustment here. Oops. What am I doing here? So let's make that 0, 2. Okay, so for example, let's go here, right? You can see the signals. It will appear after, as soon as you get your signal bar, you know, sort of your colored bar, this bar is closing and then starting to move in this bar. It'll appear as soon as it starts its correct movement, okay? So it will print there as soon as it happens. And once that prints, when you're using the trade entry signal, it's not going to reprint. Just as on the other side, if you're not using the trade entry signal, right, it will print as soon as the bar closes. So it eliminates the whole reprint thing. Markers. Yeah, I'm going to do something on markers later, not today, because it's there's just not a lot of time. Here, so click yes, it's being recorded. Al, I'll take a look. I haven't seen any of your emails, but I'll take a look on that. You've asked a question. You call this a scalper. What type of targets are you looking at? Okay, so again, you know, I trade order flow, right? That's how I trade, and I use a footprint chart when I trade. So what I'm looking for is signs in the order flow that things are changing. Now, everybody has their own way of trading, right? You know me, I'm an order flow person. I've always been an order flow person. And I like to read what's happening in the order flow. So if I'm getting something contradictory in here. Okay, so you can see, here's a trade. Okay, you're getting short. My stop's up here. Not really seeing anything too bullish, unless obviously we come up here and stop me out. But it's just sort of going sideways. It's testing this high. It's testing the high of the day. Starts coming off. Then, when I see it coming down in here, I see a potential reversal. Now, I have a lot of the things on my footprint chart turned off, but I do know this is a bullish prominent point of control coming in here after a nice move down. To me, that would be a potential sign to get out of the trade. And just reading other things that's happening in the order flow. So it really depends. Again, I'm not a huge. People are trying to twist my arm to get more into automated trading, sort of trading robots, etc. I don't want to say I'm moving in that direction, but I'm going there kicking and screaming because I like to read what's happening in the market. And once you sort of go in with automated systems and trading robots, it really, you got to sort of be precise on your entries. Sorry, on your exits. Like this is where I got to get out no matter what, right? Because what you could be looking at is every trade, whether you like to admit it or not, starts out as a potential scalp. And it's from there that, once you're reading what's happening in the market, can you continue going in that direction? Or is there something that's coming into the market that's saying the opposite, saying, hey, you know what, you should be getting out of this trade? And it could just be another signal coming in, or it could be something in the order flow, or it could be, what other indicator that you're using, right? Because again, I do know, everybody sort of has their own indicators that they use, that they rely on to help them, find, areas where they should be getting out. Some people I know like to use fib levels to get out, right? Or fib extensions, things like that, the golden ratio. So it really depends on what you're using. Okay, Bodan. Just really quick, Bodan, asking about the E-minis. So mini chart. Whoops. Give it a second to come up here. Okay, so this is E-minis. Now, again, I sent out a bunch of charts over the week of the E-minis. Here's some bullish signals as the market is moving up. Not really seeing any bearish coming in. There was one bearish signal over here near this high. Here was a bearish signal coming in. This is what's the settings I'm using on this one. This is just the trade entry signal setting of 2. Okay, so it's a little bit strong. Okay, so you got to buy here, sell here, buy here. Again, me personally, I don't really like to sit through trades for hours because I'm a day trader. I trade intraday. I'm reading what's happening in the order flow because I know that, especially now with the way the markets trade, things change, right? They come and go, right? I mean, orders are coming, people's perception. We're living in this information age where information is just coming out like a fire hose, over the internet, over Bloomberg, over TV, that everyone is their ideas are changing really quick, right? So again, the way these markets are, there's a lot of opportunity day in, day out that you don't necessarily need to be holding onto a trade all day long. Okay. So again, there's some potential signals here, but there was no trade actually. You're looking for the triangle here, right? You get it on this little move up here from the 93 all the way up into the 99s. This one at 9 o'clock. You just be careful anytime you got a number coming out. The 8:30 and the 9 o'clock times. 7:30, 8:30 is when the cash open, but 7:30, when these numbers come out. This one didn't work. There was a short in here. Again, you always got to be taking. This guy, he's commenting in the comments about stuff, but market structure, right? Just understand, you're short, you're getting short going into a low. Can the market go lower? Yeah, it can. As you can see here, if you took the signal, yeah, the market dropped off from 90s down into the 70s. But you got to always be wondering, is there that capacity for that market to move like that? Okay, so yeah, this is 5 in the morning. This is the overnight session. So yeah, that's the E-minis. That is the ES 1 minute chart. And again, the settings on that is just trade entry signal on with a strength of 2. Bob says, okay, Bob. I was going to make a note of that, Bob. When, if ever, do you alter offset parameter in your? Well, all the offset parameter does. Let me just get back here to. Well, let's go back to a simple bar chart. Well, default is set at 1. If you were to change it to 5, right, it just moves it up. So, because sometimes people have other indicators that are also signaling with a triangle or something else. And if you have it, depending on where it is, it might overlap, right? So what that does, so you can see, right, like up here, further off the bar or further below the bar. That's if you're going to adjust it. If you got nothing else going on it, right, you just keep it at 1, closer to the bar. But if you got something else that you're used to using, maybe you want to set it at 2 or 3, a little bit above, just so it doesn't overlap it. Eduardo asks, yeah, it can run on charts with other indicators. Neil asks, is trade entry signal available for your other indicators? Yeah, it is available for most of the other indicators. Here, can you explain the validity bar? Okay, that validity bar is the bar that's colored blue or this orchid color. Okay, and that's sort of where the reversal is starting. And then when you add in, the strength and the trade entry signal, it's taking other things into account to sort of confirm that the reversal is actually taking place. Okay, but that is the validity bar, as you call it. That's the bar that if that bar gets violated, meaning if it trade, for a bullish signal, if it trades below it, then you want to get out of the trade immediately. Or if it trades above the bearish one, that's your point to get out, right? That's your stop placement area. That's why we color that validity bar. Richard asks, no, it doesn't repaint. I thought I was clear on that. It won't repaint once it paints there, because if you're using the trade entry signal, as soon as it makes that move, it's going to print and it won't repaint. If you're not using the trade entry signal, once the bar after that validity bar confirms it and closes it, the bar closes, then it will paint, and it's going to paint on that second bar, but it's going to paint it after that bar closes. Yeah, Alan, you could use it on multiple computers. You don't need to add extra computers for the reversal scalper. You don't need the extra license. Let me see here. Okay, so Richard, does the blue color at 1048? I'm not sure what you're asking here. Maybe that's a different chart. Is it this other chart? Oh. Then the blue arrow at 1051 paint at the end of the bar. So this bar, the blue bar will paint, but once that bar closes, you remember, it's not just having the validity bar painted a color, right? For a signal to happen, you still need some other confirmation. This is just sort of cluing you in that, hey, you know what, a potential reversal might be taking place. It's when the triangle prints, that's the actual signal that you're taking. You're not taking the signal off of the color of the bar. Okay? It's just a visual thing because you want to be knowing where these reversals are taking place, but then you still want the confirmation. If you don't want to use these colors, right? Yes, you could just change it to either transparent, right? Well, no, you're not going to change it to transparent, but what you would do then is, well, let's go back to whatever it was, navy, and well, let's make it orchid. Yes, you'd make it very faint, 0, or but again, you don't have to use those. I mean, you could just keep them your normal bar colors, the green and red's at the bottom, right? Well, you gotta make it 1, right? Just so you're not confused with that. So again, it's up to you whether you want to use it. I like to use it because it's going to give me a visual on where to place my stop. I don't want to be struggling in placing a stop way up here at the swing high when I could be placing my stop based off of where the reversal is potentially taking place in the market. Does the time frame differ according to instrument? Is so how you know which to use? Well, again, you just want to use it, try it with your chart, right? The chart that you're using for trading. And it's one of those things where, again, I could talk to 10 traders and I could get, and ask the same question, what chart do you use? And I could get literally 10 different answers. So, it really depends on the chart that you're using and your adjustments. Now, Shlomo asks, what about, well, Greg, really quick, no, delta is not part of it. Does the scalpel work on 10 range bars? Okay, so let me just go back here, remove it real quick, edit again. These colors are set up. And again, first time you enter your email in there and click enable, you don't have to go in and re-enter it. But if you're adding it fresh again, you will have to click enable, but it already registers your email. With range-based charts, okay, let me just go in here real quick. Make this a little bit bigger to see. 10. Okay, so go to range-based charts here. 10 range chart. What am I looking at? I'm looking at euro currency. With a range-based chart, especially a 10 range chart, it can get a bit tricky, honestly. It's because on volatile markets, 10 range might not be enough. Okay, so for example, right, I have trade entry signal turned on. If I turn it off and use the default setting of 1, you're going to see a lot of signals, right? It's not going to be effective at all because what you're getting is a lot of potential reversals up and down because it's just upticking by, again, this is euro currency. Let's go change the market to ES, right? And it looks like crap on an ES 10 range chart with the default settings, right? So you probably need to go in and adjust probably either, well, you'd want to put on, for one, the trade entry signal, okay? And you'd probably want to use some sort of strength, I don't know, 3, this is 3. Okay. But again, even with the 10 range E-mini chart, last thing you want, if you're using a range-based chart, really, the whole point of using a range-based chart is seeing how the market is moving, not related to time. And if you're using a 10 range chart on ES, sort of one of the signs of sideways market, or maybe your the 10 range is sort of too I don't want to say small to take in the price movements, is a lot of back and forth, green bar, red bar, green bar, red bar, green bar, red bar, right, like that. It's not really necessarily giving you that movement because you're sort of ticking up, ticking down, ticking up, ticking down. You know, you might want to use, I don't want to, you know, make you change the chart type that you're using, but if you're using, say, you know, a 15 range chart, you know, you're starting to get more of the price movements per se, okay? Then, you know, again, if you were using something like not the trade entry signal, you know, maybe you want to use a higher strength, go from there, sort of set it out. But again, on these markets that you're going to get a lot of sideways activity on, you know, you're going to get chopped up, you know, regardless of what you're using. You can see the day before when you're getting nice movements in the market, you're getting some nice trades. Again, this is the problem with using range-based charts, is it sort of ticks up, ticks down, ticks up, ticks down, ticks up, ticks down. Red bar, green bar, red bar, green bar, red bar, green bar, right? What, you know, maybe you probably want to try is, I'm not asking you to change your chart type by any means, but, you know, if you're on a different chart, right? A Heikin-Ashi chart, for example, okay? That's, well, set it at 0, okay? Sort of giving you better swings to deal with. So again, it really depends on the chart type that you're using. So anyway, guys, I'm going to end it there for today. We got on for about an hour. I got through a lot of these questions, so that was good. I'll take a look, and you know, I'll send an email out if there's any of these late questions coming up. I did explain the validity bar. Okay, that's the bar, that's the colored bar, where it's picking up what's happening in the order flow for the reversal. So for example, okay, this bar here, right, the bar that's colored, that's the validity bar. This bar that's colored is the validity bar. This bar that's, again, if it might be a little bit hard to see with the color, so I'll just make it a little bit stronger. The orchid and the navy colors, that's the validity bar. That's telling you that, hey, you know what, a reversal is starting here, okay, based off of, you know, what it's analyzing in the order flow that's been happening, right? The validity bar here, right? The validity bar here, just as the bearish one up here, right? The bearish one here. And the signal, the trade signal, is the triangle up or the triangle down for shorts, the triangle up for longs. The validity bar is the area that you're going to place your stop behind. So if you're long, right, you're getting long, it's this low of this bar. Came back, stopped you out, then made the run. But this bar here, right, this is the validity bar. Stop just goes right below it, right? Catch that move, just like here. This is the validity bar. You're going to place your stop. If you're getting long here, you're going to place your stop to get out just below. So that's what the validity bar does. All right. So anyway, guys, you know, Bob, I'm still investigating that bloodhound issue. Send me some more notes. That'll be helpful. At least I can go back to my programmer on it. But I'm still investigating it. So, you know, I'll probably be later this week. I'll be doing something, trying to get something with Pablo, sort of pin down a date that we can do something together on some of the order flow tools. So I'm gonna send out one. You know, I get some time this week on markers as well. So thanks everyone, and enjoy the rest of your Sunday. And you know, again, you know, the reversal scalper for now, it's at about half its normal price, because once this promo period goes over, you know, I usually I'll launch my indicators, and the first week or so, you know, I do offer a discount, but after that, you know, the price, you know, it sort of goes on the shelf at the normal price. So it's just go to reversalscalper.com and you can learn more about it. So thanks again for taking your time out, everybody. Enjoy the rest of your Sunday, the rest of your weekend. It's a long weekend here in the US. So thanks, everyone. Bye-bye.